Hi guys, it's Stock Curry, and this is going to be a jam-packed video. The markets just flipped again. I'm going to tell you what's going on. We also have earnings from Tesla and United Airlines, and I've got some really interesting news coming out of the housing market. So let's get into it! Let's start with the housing market. Mortgage demand drops to a 22-year low. That's right, mortgage demand is now lower than it was at the bottom of the Great Recession. In fact, mortgage demand is as low as it was in the year 2000. Now, you might think this would be terrible for the housing market, but actually, so far, that's not yet the case. In fact, housing prices rose again in June to a record $416,000. Now, what's interesting about all of this is that sales have started to decline significantly. We are seeing a slowdown in sales in both new construction as well as existing home sales. And yet, home prices continue to rise, which is really an interesting dynamic. It shows that even though demand is going down, that there's still more demand than supply. And that's why we see home prices continue to rise. However, Redfin did report that starting in June, there was a spike in the number of homes on the market that were seeing reduced prices. So if there was a spike in June on the number of homes on the market with reduced prices, why did we see a record increase in home prices in June? Well, you have to understand that the home prices are based upon homes that went under contract in May. They closed in June, but they went under contract in May. So these are really May's home prices that we're seeing here. There are some people that think, well, we need to actually see layoffs before we actually get a decline in home prices. And we already know quite a few companies have done layoffs, and actually those layoffs continue to this day. In fact, Ford just announced that they are laying off 8,000 people. Now, it's getting to the point where these layoffs are becoming daily news. We're seeing more and more companies do layoffs, and more importantly, we're seeing the number of people who are being laid off increase as the layoffs get larger and larger. Now, in addition to that, all of this is going to start ballooning. We're seeing the unemployment claims rise. We're seeing the number of job openings fall. And so all of this is pointing to us getting back to a more normalized labor market where the unemployment rate is no longer at these overly historical lows, and we don't have 1.9 job openings for every person out of work. We get more to an equal balance of one job opening for every person out of work. That's actually what the Fed is going for, and that would be more of a healthy economy. Now, despite all of this negative news, the stock market is rising. In fact, both the NASDAQ and the S&P 500 closed above some very strong technical resistance levels on Wednesday. And this points to extreme bullishness in the markets. So I want to let you know I've completely changed my game plan. I got rid of all of my puts. I have gone long now on calls and some verticals that are bullish. I have completely switched it up and gone long because of just how bullish the markets are. So I'm going to talk about a couple of my plays here in a minute. But before I get to that, I want to let you know when you should actually sell. Because obviously, in order to make that decision to switch from puts to calls, I had to go sell those puts. And a lot of new investors, they have a pretty good idea when to buy. They're able to do their technical analysis or fundamental analysis and find that stock that's a good buy. But then they have no clue when to sell. So I want to let you know that if you bought in for a fundamental reason, say you bought in an undervalued stock and now it's back up to fair value, or if you bought a growth stock that you think is going to increase significantly and now it's been a few years and it grew a lot and now it's no longer growing as fast as it once did, or if you bought a dividend stock because it had a high dividend yield and now they cut their dividend, there's no longer a great dividend on it. Whenever your reason for buying no longer is there, that's when you want to sell. And on the technical side, same thing. If you see a bullish pattern and you buy in and then it rises up and it gets up to that next resistance level, you want to go ahead and sell out. And same on the bearish side, if you buy in on a bearish position and it drops down to that support level, you want to go ahead and sell and take those profits. But one of the most difficult things for new investors to really get a hold of is when to sell at a loss. And I got to tell you, selling at a loss is the most painful part of investing in the stock market. However, it is also a crucial tool that you need to learn in order to make money in the stock market. Nobody, and I mean nobody, makes money on every single trade. If you're watching some YouTuber and all they do is show you their wins and they never show you their losses, run. You want to follow those YouTubers who are showing you both their wins and their losses, because those are the people you know you can trust, because everybody loses money on certain trades. Nobody gets it right 100% of the time. So I want to go over some of the options that I sold today, and pretty much all of these I sold because they were bearish positions and the markets turned bullish, which means my reasons for buying in were no longer valid. So one of the options I sold today was a Meta. This was a vertical bull spread, and vertical bull spreads, when they're a credit, those are actually going to be a bearish position. So I had essentially bet some time ago that Meta, which of course is Facebook, would go flat or down, but that it would not go up. And for a couple of weeks, it actually dropped. But over the past week, it has risen, and it got right back up to that price that I'd originally opened this position on. And that was my stop price. I said, if it goes up, I'm out. Since Meta did actually start going up, I got rid of this position. I did a buy to close. And because I had sold this originally, I was able to capture some of that theta decay. So even though Meta never went down like I thought it would, and actually went against me, I still managed to sell this for a 17% profit since I was able to take advantage of the theta decay. However, that was not true for all of my options I sold today, and I had opened some SPY and QQQ put options last week. SPY is an S&P 500 ETF, and QQQ is a NASDAQ ETF, expecting the market to continue to go down since it was quite bearish last week when I opened these. And when the market flipped and finally I hit my stop loss today when we crossed above those resistance levels, I unfortunately had to sell these for a 41% loss. Now, nobody likes to sell for a loss, especially a 41% loss. But let me tell you, it is way better to sell for a 41% loss than to bag hold it and end up with a 100% loss. Selling for a loss sucks, but you have to do it, because part of investing in the stock market is that it is just as important to conserve capital as it is to make money. If you don't conserve capital and you bag hold your losses, you're going to wipe out all of the capital that you could have moved into a winning position. So take those losses. It's all part of trading. Everybody has losses, and just forget about it, learn from it, and move on to the next trade. So let me talk about what my next trade was. I sold a vertical bullish put spread on Tesla today. I actually sold the $745/$750 put spread. This makes a maximum profit if Tesla closes above $750 on Friday. Now, after hours, Tesla reported earnings and they got up to $753 is where they closed after hours. And based upon the calls and puts, if you had been holding a put option, you obviously would have lost money because the stock went up. And if you had been holding a call option, you also would have lost money because the stock did not go up as much as the implied volatility pointed to. So unfortunately, both put option and call option holders on Thursday are going to get what's called an IV crush, or an implied volatility crush, where the stock does not move as much as people expected after earnings, and so unfortunately both calls and puts lose value. So that's the benefit of doing vertical spreads. And before I get into what the actual Tesla earnings were, as well as the United earnings and what's coming up the rest of this week, I wanted to let you know that if you want to know everything I buy and sell, you can come join me in the VIP Discord. Most importantly, I have a lot of training in there so you can learn how to do these vertical spreads that I did on Tesla today so that you can make money even if Tesla only goes up a little bit. If you're interested in that, you can sign up for that at stockcurry.vip/getvip. That's stockcurry.vip/getvip. All right, let's get into the Tesla earnings and kind of go over what happened on those. Tesla's revenue came in line with expectations. It was only very mildly below it, and it was a massive revenue growth of 42% year over year. Earnings, Tesla actually beat on. They had earnings of $2.27 per share. So overall, their earnings were really good. Now, there were unfortunately some bad parts of this, and that's why we did not see Tesla rise more than it did. Some of the bad parts are that the automotive margins declined, and this was a little bit of a concern. We knew that inflation was increasing their costs. We also knew that Tesla was raising the price of their vehicles. What we did not know is if the increase in the price of the vehicles was going to make up for the increase in the costs, and unfortunately it looks like it did not. So their margins did go down a little bit, hurt earnings, but still earnings were higher than expected. So overall, it was an earnings beat. Now, one of the key things that everybody was looking out for in the Tesla earnings was something called free cash flow. And essentially, this means, does Tesla have more money than they're spending? So is their income higher than their expenses? And unfortunately, for the last quarter, it was not. Tesla did not have free cash flow. Their expenses exceeded their income. Now, this could end up being a problem down the road because it could mean that Tesla might run into trouble paying their bills or paying their expenses. And one of the things that people was looking out for was, okay, free cash flow may have been negative, but could they possibly sell some of their Bitcoin in order to pay their bills if something went wrong? Well, as it turns out, Tesla already dumped 75% of their Bitcoin holdings. Now, this is actually a bad thing for two reasons. One, that means Tesla sold at a loss. Two, they already sold 75% of their Bitcoin holdings, and they still did not get a positive cash flow. That's not good. And they've only got 25% of those Bitcoins left. Tesla's really going to have to turn things around. Now, the good news is the earnings call was quite positive. Tesla did have good forward guidance. It looks like they expect things in Shanghai to get back online, so their China deliveries should go back up. They also reported that their Berlin Gigafactory was online and that is now producing sales, so it's no longer just a huge money sink. It's actually producing revenue now. So overall, it looks like Q3 and Q4 are going to get back on track for Tesla, and that is a good thing. They still have a massive backlog on cars that they need to get out, so that's also a good thing. Tesla's going to be just fine. This was certainly a bad quarter for them, but it looks like it's going to be one bad quarter, and things should go up from here, and that's why the stock overall was up after hours. Now on to United Airlines. This was the first major airline to report, and United Airlines reported a surprise profit. They did not expect to get a profit this quarter, but that's exactly what they reported. They reported a profit due to a surge in the number of people who were traveling. United Airlines had really strong demand, and luckily it looks like that demand outpaced their higher fuel costs. However, United did not provide really strong forward guidance. They actually said that they were going to scale back their growth plans. Now, what's happening here is that the airlines still have a hiring shortage. They're short on pilots, they're short on ground crew, they're short on baggage handlers, they're short across the board. So what's happening is United is going to tighten up, they're going to become leaner, and they're going to make sure that they have less cancellations. Now, in order to do that, they have to cut back on the number of flights that they offer. And that means that they're going to have fewer flights. They're not going to grow as fast as they were originally expected to. However, with them doing lower flights and becoming a much leaner organization, this should help their profits continue to increase. So hopefully we do continue to see that. Overall, great earnings from United Airlines, and it's really good news and gives me high hopes for Thursday. The reason this gives me high hopes for Thursday is because we also have American Airlines reporting before the open on Thursday, as well as AT&T. So if American Airlines can report as good as United did, I would expect the stock market to continue to rise again on Thursday. Now, of course, what the stock market does day to day is anybody's guess. What I can tell you is the technicals have turned very bullish. And if this bullishness can hold, we could go on another massive rally like we did during the last earnings season and see the market go up 20% or more from lows. Which leads me to the Moomoo Millionaire Club Challenge. A lot of you guys have been asking when we're going to get that started. I do plan to start that in August. I want to give you time to get your account open, to get your account funded, since it does take about 5 days to actually get that account open. I want to let you know that the Moomoo 10 free stock promotion ends at the end of this month. And just a reminder, if you deposit $100 or more, you're going to get 6 free stocks. If you deposit $2,000 or more, you're going to get 10 free stocks. So make sure you go ahead and open your account and get it funded before the end of this month. And then we'll go ahead and start the Moomoo Millionaire Club Challenge in August. I hope you enjoyed this video and got a lot out of it. Don't forget to hit the like button and subscribe if you haven't already. If you're on YouTube, go ahead and click the bell icon and click all. And I hope you have a lot of success trading, and I will see you tomorrow.